Hello students, welcome back. So we are going to begin another problem in joint venture account where the co-ventures maintain a separate set of books. So today we are going to solve another problem on joint venture. 2015 question paper. Akash and Ashwin undertook a joint venture for the construction of a college building. A bank account was opened in which Akash deposited 2 lakh and Ashwin 50,000. The contract price was 10 lakh. The profit of joint venture was to share as to Akash 2/3, Ashwin 1/3. The details of the transactions are as follows. We have wages 30,000, salary 30,000, wages 1,80,000. Material supplied by Akash 35,000. Building material purchased 4 lakh. Material supplied by Ashwin 35,000. Architect fees 25,000. Carriage 45,000. Machinery purchased 80,000. On completion of the contract, unused material 40,000 were taken over by Akash. The machinery was sold for rupees 60,000. Ashwin was to be paid a remuneration of 30,000 for his service, which is to be charged to the joint venture. Prepare ledger accounts. Akash and Ashwin undertook a joint venture for construction of a college building. A joint bank account was opened in which Akash deposited 2 lakh and Ashwin 50,000. This is called capital contributed by the partners. So 2 lakh and 50,000 is called capital. Therefore, it will come in two places, co-venture and joint bank. The contract price was rupees 10 lakh. So 10 lakh is called the contract price. We can also call this as sale price. So once the building is constructed, the company gets a total revenue of 10 lakh. So 10 lakh can also be called as sales. The profit of joint venture was to share as to Akash 2/3 and Ashwin 1/3. So therefore the profit sharing ratio is 2/3 and 1/3. In short, it's called 2:1. The details of the transactions are as follows. Salary will come in joint venture and joint bank. Wages, joint venture, joint bank. Material supplied by Akash, joint venture, co-venture. Building material purchased, joint venture, joint bank. Material supplied by Ashwin, joint venture, co-venture. Architect fees, joint venture, joint bank. Carriage, joint venture and joint bank. Machinery purchased, joint venture and joint bank. On completion of the contract, unused material 40,000 were taken over by Akash. So Akash took over material for rupees 40,000. So 40,000 will be recorded in two places. It will be recorded in joint venture and co-venture. The machinery was sold for rupees 60,000. It's a sale of machinery. Joint venture and joint bank. Ashwin was to be paid a remuneration of 30,000 for his service, which is to be charged to the joint venture. So 30,000 is a remuneration to Ashwin. It's called salary to Ashwin. It will come in joint venture and co-venture. So thereby the joint venture account, credit side you write by joint bank 10 lakh. It's called the contract price. In our language we can call this as sale price. Then by Akash took over material So materials goes out. When a co-venture takes a credit, what goes out? So materials going out will be recorded in the credit side. And then by joint bank, 60,000 indicates machinery sold. So machinery sold, credit side. Materials gone, taken over by Akash, credit side. And contract price will come in credit side. To joint venture, total expenses 7,60,000. What are the expenses paid by cash? Salary, wages, building, architect fees, carriage and mission. All these six items are being paid by cash. So you write to joint bank account 7,60,000. Next to Ashwin, 30,000. So Ashwin pays 30,000 towards the remuneration. Salary payable to Ashwin is 30,000. It's an expense, so it comes in debit side. Next to Ashwin, 35,000. This is the material supplied by Ashwin. That means purchase of material by Ashwin, 35,000. Next to Akash, Akash have supplied materials 35,000. Therefore, you get a net profit of 2,40,000. Co-venture account by joint bank account, capital contributed by Akash and Ashwin 22 lakh and 50,000. By joint venture, material supplied by Akash 35,000, material supplied by Ashwin 35,000. Next, by joint venture account, 30,000 is a salary payable to Ashwin. 30,000 is a remuneration payable to Ashwin. Akash, no remuneration, so it's dash. Next, by joint venture account, what is this 16,000 and 18,000? The profit distributed among the partners. So joint venture shows a profit of 2,40,000. So 2,40,000 to be distributed in 2:1 ratio. So thereby Akash gets a share of profit 1,60,000. Ashwin gets a share of profit 80. Next, debit side to joint venture account 40,000. Materials taken over by Akash. And the final settlement answer, final payment to Akash 3,55,000 and Ashwin 1,95,000. Joint bank account, debit side indicates receipts, credit side indicates payment. To joint venture account 10,60,000. What is this 10,60,000? The sale price 10 lakh. Machinery sold 60,000. The machinery sold 60,000. Contract price 10 lakh. So we have recorded in the credit side of joint venture account. That's contract price 10 lakh plus material sold 60,000. To Akash account, to Ashwin account 2,50,000 indicates the capital contributed by the partners. By joint venture account 7,60,000 total payments paid for salary, paid for building purchase, paid for architect fees, paid for carriage, paid for machinery purchased. So various payments and expenses put together 7,60,000 we have recorded in the debit side of joint venture account. Here it comes in credit side. And final settlement to Akash and Ashwin. Final answer, the final settlement to be made to co-venture 3,55,000 and 1,95,000. Thereby the joint bank account tallies with 13,10,000. Thank you.